listen-only mode.
Good afternoon, everybody. This is Stan and Jack. This is webinar number 2 for the holiday special this year, and this one is going to be on trending patterns. And we just finished the one on Elliott Wave. Terms of use, everything we do on the Art of Chart is for educational purposes. We don't issue trading signals. So we hope that you gain something from this website in terms of the way that we look at the market and the way that we actually do trading, and the way we look at structure and so on and so forth. So those are the terms of use. We hope you benefit from this, and let's go to the main page and just talk a little bit about what we're working on here. So today, the holiday special, Elliott Wave and retracement patterns we just finished, and now we're on trending patterns and how to trade them, okay? And I want to call your attention to the next webinar after this one, which is next Thursday on the 17th of December. This is going to be a very special chart chat. We're doing it publicly. This is the long-term view for 2016 and beyond. So we're going to be looking at weekly charts. We're going to be making predictions for next year, which, by the way, if you remember, Jack, we did that last year. And I actually have the results of that, so I'll be sharing that at that point in time as well. So, so keep that in mind, guys. We have that coming up next week. And with that said, Jack, let's take a look at what you have in mind for today, and outline-wise. And you have the screen.
Well, I haven't actually done an outline, and that's because it's a little too straightforward to really require an outline. Basically, I'm talking about the 3 types of trending patterns, and those types are the wedge, which is basically a contracting channel, directional, the channel, which is a channel which is just 2 parallel lines, and a megaphone, although it's calling it an ascending broadening wedge here, and that is an expanding channel. And these are the 3 types of trending patterns. I'm looking here at Bulkowski's site, not because actually he's identified these as trending patterns, because he hasn't, but because Bulkowski is actually the key reference for charts. I disagree with quite a lot of the stuff he's done, but then I've been building on his work. I can build on his work because of his work. So if you come and look at this page here, this is the visual chart index. Very useful reference. I think he's a little weak on the trending patterns, but very, very good for all sorts of other things. And he's got sections on Elliott waves and candlesticks as well. Now, we're talking about, the 3 types of trending patterns. I wrote a post on channels of patterns a couple of years ago, and I was talking about identifying that all trends, i.e. when price is trending from down to up, or up to down, etc., all trends tend to form one of 3 patterns, and all those 3 are variants on the same pattern. They're all variants on the channel. You've got a channel with parallel lines, although actually I would call this one a megaphone, personally, but we've got a channel with contracting trend lines, which is a wedge, rising or falling wedge, and you've got what I would call a megaphone, which he is calling a broadening wedge. I think, but the reality is he's got some very unwieldy names. I think it's easier just to consider them the wedge, the channel, and the megaphone. And I want to talk about those and how you trade each one of them. Now, let's have a quick look at. Now I'll just use the real-world examples from my experience because honestly, they tend to be pretty good examples, and also the other thing is you can see all these things as you go through them, and furthermore as you go down the chart, because this is here, one second, let's pull up my this is the 1 minute chart, and you will find the same patterns on the 1 minute chart as you will find on the weekly. In essence, you'll find some differences. You'll find differences in the way the RSI behaves, and the weekly inflation is an issue, which means that you're not going to get as many full retracements over long periods. But nonetheless, I mean, in principle, all the ones are the same. Trend lines behave in the same way. Reversal patterns the same way. Trending patterns behave the same way. So let's have a look at. Let's have a look on the 60-minute chart at the last few weeks. This is from the August low. Now here, we've got a number of trending patterns here. We've got the pattern down, and this is basically a crash. So there is no pattern. It could be part of a larger pattern, but in practice, actually, this wasn't really. This was just a plunge down to a low. So, and you sometimes get that. You will find there will actually be trend lines if you look very closely at this. And when they break up, it is significant. But there's no pattern that you can see really on anything on the bigger picture. Actually, okay. Looking at the slightly bigger picture, because we're on the daily, here is the rising wedge from the October low. It forms in a series of smaller trends. Up and down, these trends will usually form patterns as well. And you will see a lot of those on my chart when I'm marking the internal patterns within. You can see some of them on here. I tend to delete them after a while because stock charts actually only allows you a limited number of notations on a single chart, and I quite often reach the limit and have to delete a load of trend lines. But
you're the only other person in the world that I've ever heard say that, other than me, because I have the same problem.
Yeah, I know. Well, I mean, quite regularly I get informed by stock charts that I've reached the maximum number.
Yeah, I told a friend of mine the other day. He asked me, like, well, how many notations do you have on your chart? And I looked, and it's like, oh, about 1,500. He's like, what? It's like, well, yeah, sure, absolutely. Anyway, so I didn't mean to distract you, Jack, but it's actually important. This is an important point. If you have a history of actually marking up your charts the way we're teaching you here, you're going to have issues like that, and it's not a bad thing because you can always go back and look at your previous notations, learn from your mistakes, etc. Okay, so it's important. Anyway, I'm sorry to interrupt.
Yep, exactly right. Now, if you have a look at these structures here, this one forms a wedge, a rising wedge that breaks down. This isn't an easy one to trade. This actually forms a head and shoulders, which is there. I marked it up because it was, a tricky one to trade. But you're basing the core of a pattern breakdown, trending pattern breakdown, is obviously the support trend line break. And this is a nice one here. 1, 2, it confirms, which you'll often see, and then it breaks. So you've got a nice 3-touch trend line that breaks down. Very nice. That's tradable. In terms of topping patterns, this one wasn't particularly, but there's a very wide variety. Here, you then form a declining channel. The channel is normally formed with you take the first significant bounce, and you'll see more than one significant bounce. For instance, here, the initial pattern would have been using this bounce down to there, and that's broken up and retraced, and then the large degree pattern, you are taking this high here to this high here, and you're drawing the trend line through that. Parallel lines gives you your channel. That's a very nice channel. When it breaks up, you're looking at a reversal. You will see some sort of the two main patterns. I would say there's two main patterns for a reversal. The first one is the double top, and that is here is a double bottom, absolutely classic. This is the normal kind of pattern. On SPX, you'll find that 3 out of 4 reversal patterns are double tops or double bottoms. They may not always be even, or as nice as this one, but nonetheless, that will be the case. One reason I was talking about the possible test of 2170 on the last webinar was because there is actually a target for this double bottom here, and that target is in the 2140 area. I would like to see this move end there. That would be a nice shorting area, and we should get a last pattern going up into it. It's if you have a look at the channel breaks up, we retest broken channel resistance, and this is we did exactly that with the triangle today, of course. Let's have a look. I think it's on the 5-minute chart. Right, here's yesterday's triangle breakdown. This is not a trending pattern, obviously, because it's going sideways, but this is a very nice example of a retest. You've got your triangle, breaks down here, comes back and retests and fails. This one actually, hang on, I'll just pull this forward. I think I had updated this since midday. This one retested twice. Yep, that has formed a double top pattern. That has not yet broken down, but once it does break down, it returns you basically to yesterday's low, which then needs to break. But what this should be is triangle breaking down, retesting, and then the main thrust beginning. And I think I'm right in saying, Stan, that after the triangle thrust finishes, it should retrace to this level, shouldn't it?
And can you point where that level is, Jack, again, please? I'm sorry.
2067.65 on this one.
Yep, yep, mm-hmm. Yep.
Yep. So this is a very nice example of a break then retest.
Yep.
Retests are a good entry opportunity. This was the key entry opportunity for short today.
Mm-hmm.
And was nicely signaled because there was a trend line coming down here, which you can see on my 1 minute chart. Okay, 1, 2, 3, breaks up, and this is your bottoming pattern, which in this case is a complex IHS, and then breaks across and then up. That is a very nice classical setup. So the retests are a very good entry level. A lot of us entered short today at these retests, and hopefully that's going to deliver a very nice move indeed. If it doesn't, we'll have taken the money and they're all leaving stuff already. So that's okay. Now, what are you looking for in terms of entries? Well, you can actually short, and on this one, it actually wouldn't have been that bad an idea to short the break of the trend line, but you will, the support trend line, but you will find a lot of the time that it will go higher. Sometimes it will go considerably higher because after it has formed after it's broken the trending pattern, which in this case is a rising wedge, it's then got to form most of the time, not all of the time, never all of the time. But most of the time it has to form a reversal pattern. Often it will form 2, and very regularly it will form 3. This is one reason why topping takes a while, in a way that bottoming tends not to take a while. It's here you've got little head and shoulders here, and this is a nice pattern to see a nice setup to see as you are finishing a rising wedge, because that gives you a reversal pattern there and it gives you an entry. Ideally, if you've seen it and you're tracking it, ideally you enter at the top of the right shoulder, which usually on a head and shoulder pattern will not be far away from the head on the left shoulder, regardless of whether it's sloping up or down. It's nice entry area there, it breaks down, you will generally get a retest of some kind. Again, you have another entry level to get with the trend on that one. And it'll come down there, it will develop a declining resistance trend line. I put these on everything. The declining resistance trend lines are on all the charts on every move.
Yeah.
And you can't, you don't jump on it on the counter trend. Often if you're in a strong trend, you won't play the counter trends at all, and you shouldn't play the counter trends at all. But it will show you when the trend is in question. As long as it's holding its declining resistance or rising support trend lines, then the trend is not in serious question. Although if it gets too far away from those, you might consider taking some money because, reversion to the mean. So here, we break down, you draw the Fibonacci levels, and there are 2 types of rising wedge. One of them is, they're both trending patterns, but one of them is the full reversal one, and this is a wedge that ends a trend. And this one, not actually this particular one, because this won't, but this one here, for instance, rising wedge, breaks down, you get a full reversal. Actually, quite make it the last 4 points, but near as damn it, close enough for government work. This is a full reversal back down. You will often see this happen at double bottoms. You'll then have this is what I would describe as a continuation wedge.
Mm-hmm.
It may only continue up to a retest of the all-time high at 21.34. Had hope for a bit higher. I'm not sure that's going to happen now. But you're getting the wedge, you break down, and you're looking for a target between 38 and 61.8% fibs. You have to be aware that there's a possible fail area near the 23.6. If you are in a strong trend. The earlier you are from a big reversal, the more likely it is that you're going to get a shallow retracement and a very quick move up further. If you've got a very mature move, and I'll show you a very mature move. Hang on a second. Just pull it up from my blog quickly. But I
have an example of a wedge, by the way, when you finish, just to share.
Okay. Well, actually, no. I'll throw it over to you. I'm pulling up a couple of examples from the blog.
Okay.
So while I'm doing that, why don't you share a couple?
Yeah, sure. Let me show you a wedge. And there is an overlap between classical analysis and Elliott that, you know, someday you and I, Jack, we're going to put a book together. It's going to be a heck of a book because there's something about how everybody has their quote thing in trading, all right, but nobody actually looks at other people's thing. And actually integrating across disciplines, I think it's like magic, guys. It really is. So here is a trending pattern. And let me just share with you a trending pattern. And by the way, one way to look at this is here is your A, and we just got done with this retracement pattern thing, right? We're in a retracement pattern in the dollar. This is the US dollar. And at the same time, while we're in the retracement pattern, we have a trend. Okay, so here's your A, 3 waves back for the B, and by the way, A, B, and here, this is a 5-wave move. What is that? That's a flat. We just got done talking about that, right? So A, B. Now, here's the trend, and here's the wedge. You can see the wedge, the drawing that I put in here, right? Look, that is just beautiful, and it just rode that top line. And here's something to look at. So here's the trend line, right? And by the way, the thing that Jack said, and I just want to point it out because it's important. Okay, a trending pattern honors a trend line. Okay, and now even though that's obvious, right? It does. Look, all right. There's a huge move from 94s all the way up to 99s. Okay, we never broke the trend line. We didn't break it until right here. And just because you break a trend line doesn't mean that the trend is over. Okay, this here is a contracting ending diagonal. And by the way, Jack and I have talked about this many times. When you get a contracting ending diagonal, it is a wedge formation. And by the way, that looks like this. The 1 is the largest wave, then you have a smaller 2, you have a smaller 3, you have a smaller 4, and you have a smaller 5. It's typically done in 5 swings. Okay, that's what a classical wedge looks like. It's a contracting ending diagonal. So that's what we have here.
You'll sometimes get on RSI. You'll sometimes get a triangle form.
Yeah,
because really this is the type of triangle.
Yeah, so you can look at this as a rising triangle, which is one way to see it, or whatever. But you know, this is marking the end of a move. Okay, and then by the way, just on the A, right, in blue, this is the trending pattern. There's B, and what are we in now? We're in another trending pattern. And what trending pattern is this? Well, we're looking at the C wave going lower, which is the larger, tends to be a more trendy move, the C wave, and we could go all the way down to 94s here, but who knows where we're going to go. And again, typically in a trending pattern, you have a trend line, okay, which for whatever reason I can't seem to draw it right now, but it's here. I would put it there right now at this moment. See if it continues to fall. Duplicate that. Draw that over here as perhaps a channel. I'd probably do it right like that. That looks like a pretty good channel to me, and we'll see if it stays inside that channel. You know, so I think that's what Jack is trying to share is that trending patterns have certain formations, and whether it's a wedge or whether it's a channel or whatever, you got to get into what is the formation doing, and where are we in the larger context. So it's good to say, okay, here's a trending pattern, but in the larger context, where are we? Well, we're in a C wave. That's why this went as far as it went. And even now we're in a C wave in a larger context. So this should be very trendy, the US dollar right now. So, all right, so let me throw it back to you, Jack. I'm sure you have your stuff ready. By the way, I have a question for you. I have a question for you from Wayne. Is there a reason why you use SPX charts versus ES or SPY? Is it because you use stock charts?
Well, SPX is the basic instrument from which the others are derived. And I would use it in preference to the others in all instances except for gaps, because for some reason SPX has this weird problem with opening gaps. And I've tried to trace this down. I worked out what the issue was with stock charts, and actually it's a problem with the data they're receiving from S&P. So sort of stopped it there really, because there's not a lot I can actually do about that. So, but opening gaps on SPX, if you have a look at the SPX charts from any provider, as far as I'm aware, it's generally showing the wrong data, and you can see that form on any day with a significant gap. If you have a look at the data that SPX is recording on the chart, you will see it never actually opens on the record where it actually opened. The gap is always swallowed up in large part by it hugging the previous close. So it looks as though there's a huge move at the beginning of the day, when in fact actually there was a gap, and everyone could see the gap. So, but SPX, I think the problem with futures, and this is why I tend to, you'll see me using WTIC as a proxy for CL. You'll see me using TLT as a proxy for bonds generally. It's the reason is that the longer term charts on the futures are complicated by the roll.
They are.
Every time you roll from one contract to another, there is a cost. Sometimes it's high cost, sometimes it's low cost, but there's always a cost. That messes up your trend lines on the longer term.
Unless you have a tool like the one I use, which you can actually then modify the effect the roll has. So I have a way of actually equalizing closes and stuff like that, and you can do that. But you got to have a CQG, you got to have a trade navigator, you have to have a piece of software to allow you to do that. Otherwise, doing Elliott with a futures chart is like hazardous to your trading account because of what you're saying, Jack. I think that's an important.
That's right. And on some instruments, like say bonds, natural gas, the difference in price between one contract and the next is large enough that it can absolutely wreck your trend lines.
Oh yeah, sure.
Wreck your wave counts. Make it very unclear which were the higher lows and lower lows. And that's why on the longer term charts, you're generally always using the RTH markets, or you're using artificial proxies. Like this is the XJY index, which is the yen index.
So let's talk a moment about trading trending patterns, okay? Because that's one of the things. That's one of the things you wanted to talk about. So let's pull up an instrument, whichever one you want, Jack.
Actually, I was going to look at this. Yen example here.
Oh, great, excellent. So let's take a look.
All right, here. This is a beautiful pattern. It had actually been forming since the early 2000s. I'd been watching it for years, incredulously, as the yen went higher and higher, when people were going to it on a flight to safety trade, which was just ridiculous. And it was formed a beautiful rising wedge, had a slight overthrow there, lovely clean trend lines. And here, I called it short, and this was November 2012, I think. And I called it short on the break of the rising wedge support trend line. Why did I call it short there? Well, one, we'd already had a slight break, and this was the second break. The first break, generally, you're going to get a move inside, you're going to form some kind of a pattern. But here, it was very obvious what that pattern was going to be, because you had left shoulder, head, right shoulder, and actually, if you look at this little spike here, you've got the tops of the left and right shoulders are almost exactly the same level. This is a very, very nicely set up sloping head and shoulder pattern. So here, as soon as this broke, I called this, it's not quite as fast as it looks because it's actually the monthly chart, but this is broken, this was a week or so later, and I'm calling this short, saying the next target was there, a break down below 120 would open up 105, which actually we were there in about 3 months in this instance, I think. And then the full pattern for reversal of the wedge, which I said I thought we might well make, was back at 80. And we're there right now.
Yep.
So this
now
is 3 years on.
There's another reason why we're at 80 too. So I just want to say in terms of trading this, let's talk about 2 ways to trade this, okay? So first, we just finished the retracement pattern webinar. So do you see the triangle? Okay, so we have an A down at 68, which happened in 1998. Okay, then we have the B in roughly 2000, up at 98. Then we have the C at 74, which is in 2002. And then we have the D at 98. And then we have the E wave, if you see, in 2007 at 80.55. So right there is a triangle, and it contracts beautifully. RSI is contracted, and what do you get out of a triangle? Out of a triangle retracement pattern, you get a thrust, okay, which is what you see there. And then what does it do? Typically, triangle patterns completely retrace. Okay,
which it did.
Yeah, absolutely. Now, what would I be doing to trade this? If I saw a 3-wave move from, if you look at the 2005 number, you have a high there at 98.09, right? 3 back, there's your E wave. That's your entry. 3 back, that's probably 100% fib, pretty darn close. So you get it.
80.55, and it came and made that target.
And then what you do is you get in right there and you ride it higher. Now, what do? You look for 3 waves up. Okay, 3 waves up is what? 114. You get out of 2/3 of the trade right there. Okay, you let it come back 50%. What does it do? It comes back to what? 98, 94 there in 2009 or so, right? A 50% back move is where you add more. I would add more there, right? And then I'm waiting for the top of the next trend line. Where does that happen? All the way up here at 132. I might leg out in different places, right? And by the way, guys, if we look at structure like this, if I'm trading a 1-minute chart, this is how I'm trading it. Or if I'm trading a weekly chart, this is how I'm trading it, okay? So you look for your retracement patterns, you wait for the retracement pattern to end, you put on your legs, and then you look for 3, you get out, you wait for the 50 back, and then you wait for the continuation signal. So this to me signal the continuation higher, and you get back into the trade. You add back to your trade. You take some profit because you hit your upper trend line, right? You add back at 98s and you write it up. Now, what do you do at 125s when you break the trend? Okay, when you break the trend, you get out of your long, number one. Number two, is that where you enter your short? And I say no. I would wait for the back test. Okay. Chasing a trend, or chasing a new trend is very dangerous. I would wait for the back test. So when the back test happens, you get in short, because what have you just done? You've just broken a triangle thrust. So what does that do? That tells you that the triangle is going to completely retrace. So, you know, you have a very, very good short there.
Yep. And actually, I'll show you what happened afterwards on that chart.
All right, great.
Of course, we formed a new trending pattern.
Okay.
So hang on, let's pull up. Let's pull up. This is, by the way, just to mention, this is looking at JPY USD. Normally, when people are looking at the yen, they're looking at USDJPY. So it's upside down in those terms. Now, if you have a look, right, this is the 2012 top. This is where I was calling it short. Actually, no, that's the end of the end of 2012, November 2012. So I'm calling it short here. We are starting a new trend. The head and shoulder target is down here at 105. It goes there, makes it, overshoots it, back tests it. It's all the way along. You are forming trend lines. Every single bit. This has a trend line for decline. It breaks up. You then form a falling wedge down to here. This is a very powerful downtrend.
Yeah, it is.
Yeah, very, very powerful indeed. Now, at the moment, I think this is forming an inverted head and shoulders for a bounce.
Excuse me.
But I'm looking for a bounce here because we had a beautiful 1, 2, nice little confirmation there, 3-touch trend line, very nice. This is a beautiful falling wedge, and it breaks up. What are you looking for then? You're looking for the reversal pattern. And this is either going to be an inverted head and shoulders, or it's going to be a double bottom, one or the other. And that should take us back up to test most likely the 38.2% fit. Because I've got a broken support trend line there at 95, so it should make that area. But again, you know, this is entry level there as the old pattern is breaking down.
Could you hold your cursor right there where you just had it, where that little gap is?
Yeah.
Right there. Okay. Now, guys, there's something I want you to notice on the chart in terms of price action. If we drew that line on that chart that Jack had on his previous chart, do you notice what you see there is a gap? Okay. Very often, that's how a trend ends. You come up to the trend line, you bounce, and then you gap over it. Okay. That is a signal that you're in a significant trend lower. And by the way, we just recently saw that on the S&Ps where we had a gap up over a similar trend line. So, you know, if you see something like that, that's a signal. Okay, that's a signal of a new trend. You often get those at the beginning of third waves, for example. So it's just something to look at. It's a little thing on a chart, but you know what? When you notice little things, it helps. So I just wanted to point that out.
And you'll notice me in my posts mentioning quite a lot breakaway gaps.
Yeah,
this is a breakaway gap. And this is on TLT triangle we're looking at webinar. But this is a breakaway gap here. I've drawn the box all the way across. You can see, come back, didn't fill it. Hang on. And come back, didn't fill it. This is triangle. This effectively has become triangle support. So this is you get these a lot, and when I'm talking about a breakaway gap, you'll often find these. You go through. Let's see actually whether it did this with the end trend line. Hang on. It did. I think I think you'll find that gap is through wedge support.
Mm-hmm.
That you will often see. The best way.
That's a
the best way
signal.
to win the trend.
Mm-hmm.
Yeah.
And by the way, if I were, I'm sorry, Jack. Go ahead.
No, shoot.
I was going to say, if you see that, if you are there and you see that setup right there where you gap over that blue line, it's like that's an entry, guys. That's an entry you take, and that's one of the few breakout entries I would take is at the end of a trend like this where you have a head and shoulders and you break over the blue line. That's like, for me, it's an automatic entry, and it's a breakout trade. Now,
And if you watch for them, you will see them regularly.
yeah, and absolutely. By the way, I would set my stop, and I'm sorry to say this because I know this is a lot of risk for a lot of folks, but I'd be setting my stop above 129.65. Okay, so you have to size your trade. If you're doing a breakout trade, okay, you're late to the game. You got to recognize that, okay? So what do? You make your position small, and you make sure that you don't lose more than 2% of your account if you're going to set a big stop like that. So that's $2 or so in the yen. So you got to size your trade appropriately so you don't lose your ass. But at the same time, you want to give it room to play. And by the way, this one didn't look back. Look at this. It did not look back. Yeah, right. So that's the kind of move you get when you get a signal like that. So you just gotta look for it.
And this is, I mean, and also if you consider that stop is quite a large stop, but you also consider what's in play here. If you're entering at 125, if this breaks down, you're looking for 105. So you're looking for
exactly.
a big move.
Risk reward is important, right?
Risk reward. So I mean, the reality is the risk reward on that, even with a stop up here, is excellent. Especially when you consider that beyond 105, there's an excellent chance it's going to return to 80. Which is because this is the target for the full retrace.
Right. So the 80.55. So the 80.55 was the triangle thrust. Now we've completely retraced the triangle. Now look at what's happened just now. We've broken the trend line. We have a 3 back. So what do you think is going to happen next, guys, from 80.81, which is kind of what just happened not too long ago, a few weeks ago? We're about to get an impulse higher. That's coming. Okay, so if I did an ABC off the bottom there from 79 to 86 to 80, I'm looking at probably from 80.81. I'm looking at a $7 move. So yeah, I'm looking for 87s to 88s right now, at a minimum. Okay, which it could go all the way back to 91s by right now. 91, 93 would be a first possibility.
Well, even if this is a continuation pattern, you'd normally expect to see the final target for the retracement from this break in this range here, the 38.2 to the 61.8. Might only do the 38.2, but that's a nice move. That's a very nice move. If you look again, and this is the advantage of doing the higher degrees, this is the end chart going back to the 70s. This is a monster rising wedge. The obvious test, actually, this is, again, you're looking at these things. There are patterns within patterns within patterns. This is a very high degree rising wedge. It's broken down. What are we looking for as a possibility here? Looking for a retest.
Right.
I think it's going to retest broken support.
There's a question here, and there are a few leftover questions from the previous webinar, which I'll get to in just a minute, Jack, at the end. Okay. But there's a question here about if JPY breaks up, that should destroy the carry trade and take SPX down by default, and that is absolutely true. And by the way, that's one of the things we're looking for by March. Okay, we're actually looking for that, Wayne, by March, April, to actually have a lower low in SPX. So, we don't know if that's going to play out or not, but that's one of the possibilities.
Well, I would say always be careful with correlations. Do not rely too heavily on correlations. I think a classic example of this was when I was calling out Apple short in 2012, and the RSI setup was very distinctive. It happened 5 times before. Each time had led to a very significant retracement of, on average, 45% of the stock price. and we had to set up again. It was all around a weekly sell signal, and I called that weekly sell signal, and I said Apple was likely to fall an average of 45%, and actually it fell about 48% in the end. So it halved in value. And I remember talking to Mike Barchi at Princeton Trader and saying, well, Apple's a huge company. What's going to happen to the SPX when Apple drops 50%? And this was towards the end of 2012. And Apple dropped 50% pretty much.
Yep, that's right.
And SPX went off like a rocket.
Mm-hmm.
So always be, the reality is the world is very complex. Always be concerned about the possibility that your analysis is too simplistic, and don't rely on the correlations too much.
Mm-hmm.
So anyway, just a stray thought on that. Anyway, just to talk about trend lines again. Hang on.
Yep.
This is a nice example here, and I've drawn in the trend lines, and these are all very tradable. You've got the overall uptrend here. This actually the trend line gets established quite late in the day. That is not unusual. How do you know the trend line's been established? Because you get the multiple touches. Any trend line with 2 touches is a provisional trend line. A real trend line has 3 touches.
Yeah, it's amazing to me how many people don't understand that you need 3 to have a trend line.
Yeah, you've got a working trend line with 2.
Exactly, right.
You've got a proper trend line with 3. Decent trend lines have 3 touches. 1, 2, 3. It's 1, 2, 3, and they should be good touches. Not these sort of, if you squint at it and look at it from 10 yards away, it sort of looks as though it's in the right direction. They really need to be as exact as possible. And a decent trend line has very, very exact touches, like this one. So this is where you know the trend line's been established, because you get the 3rd touch, and this is the first time this particular trend had managed to establish that, and that's an important level of trend. But if you look at the sub-trends within it, trend line up here, break, retrace. Trend line up here, break, retrace. Each trend line going up or down breaks into the next trend. You'll sometimes find here, it's actually serving a number of different purposes. This one here looks as though it's forming the second high of a double top. Doesn't make it all the way back. Then reaches the support level and launches off again. Does not make a lower low. It's but again, you can track this pretty well through the trends going through it. Resistance trend line breaks up, trend up. Breaks down slightly and recovers it. You see this quite a lot. You'll also see it's very distinctive when you look at it, because you'll see on some of the trend lines on my chart actually have a break in them. But if you look closely, what you'll see is 1, 2, let's say a 3rd one, or the 3rd one breaks through it slightly, and then the 4th one is on it. What it's done is it's broken support and recovered it. So the trend line is still working until it breaks it again. But it is a sign that it'll probably break again soon, and more seriously. So again, breaks down here and up. This is the one way that you can very easily use trend lines from a trading point of view, because it tells you on whatever degree you happen to be trading, because obviously these are moves which are lasting 4 to 8 weeks probably. It's and these are very solid trend lines that are useful to trade. If you have one where right here, for instance, you've got slightly higher high. I think probably find right. Okay, it's slightly higher high. You've got a break in the trend line. The second high. This is a double top. It's a classic double top setup. It takes a while to break down. Actually, more or less morphs into a head and shoulders. Comes down, fails slightly early, and off it goes. But you've got to have a feel for which way the market is going, and you've got to have a feel for whether the trend is secure or not. Here, your initial trend line would have been through this trend line here, but this didn't get a 3rd touch. It broke down, and then you get the 3rd touches here, and the uptrend resumes. You have to watch for that. Use of trend lines is very important. Very few people take the time to draw them properly. All right. Great. What should we have a look at next?
There is a question that somebody put out, and I'd like to answer it. It's from the last webinar. Do you assume that C waves are flushes? Can you throw me the screen real quick?
Right.
Okay.
Okay.
We just talked about the dollar, and this is the thing. You don't want to assume that a certain formation's in one direction. They work both ways. So here is it. Remember the A, B, and this trend that I just showed you? Well, this C wave is going in the opposite direction, okay? And so if you can identify the A and then a three-wave move dip back, right? And by the way, this is very similar to the example that Jack just showed you. Then you get a trend, okay, which is the C wave. The C waves tend to trend very, very well. By the way, they also work the opposite way. So a C wave does not necessarily assume a flush. Sometimes it's a rally. Okay, so that was a question from David. Okay. Do trend lines usually break down after 4 hits? That's a very good question because there are some that make that assumption. What do you think about that, Jack?
Let's go with no. You often see them break down after 3, 4, sometimes 5. You'll rarely see more than 6. But if you're assuming it'll break down the next time after the 4th, then no. And what I would say is actually a better indicator is when you've got a trend line. Actually, I've got a good example from today, so we'll use it. Let's have a quick look at the 1-minute chart. And this is a good example. Here, you've got the rising support trend line from yesterday's low.
Hold on a second, Jack. I need to give you the screen. Somebody's also asked a question about the latest Russell thing, which I'm going to set up the Russell thing next. Okay, so you have the screen. Go ahead.
All right, now, this is the rising support trend line from yesterday's low. And this wasn't one of the main working trend lines I was working with for the various moves here, but it is important. Basically, a line through the exact low and through the next low which meets it, and then going through. Breaking that trend line is always significant, even if it hasn't actually been particularly important during the trend. This is a good example because one thing you often see is if you come near to a trend line and you don't hit it, what you'll often see is you will then take off, make your next target. When you come back, you will generally break it. Because if you don't come back and do the exact touch or very close to exact touch, then it makes it far more likely to break on the next touch. You can see that's exactly what's happened here. Because we've done the second retest of the triangle, and we've come down, it's gone straight through it. That was a reasonable expectation when it stopped short there, because it should have, if the trend line would have been considerably stronger, had it hit there, then it would have a much better chance of surviving a 4th hit. As it is, I was assuming it would break on the next touch. That was a reasonable expectation.
Okay.
So, right. Do you want to do that?
Yeah, I can talk a little bit about RUT. The question is, can you talk about trends using the current RUT chart? Which I'm going to try to do that now. Okay. Okay, and so can talk about trends. Okay, so here we go with the Russell. This is a 4-hour chart. So first of all, you can see where we had the limit down day, right? Okay. 3 waves back, okay, very clear 3 waves back. Do you see the yellow box there? That's the 100% fib. That's what we just talked about. What do you get after you get 3 waves back? Well, you get something. This is a B wave. This is actually 2 waves. It's A, B, C, okay? Now, are these trending patterns? Well, yeah, they are. I mean, look at this one here, beautiful trending pattern, okay? So you could just draw the line here. And I take off my trend lines after a while, guys, because otherwise I'd have a very cluttered chart. So this is a wedge, right? There's your wedge, and wedges have a 70% shot of breaking down. So, you know, there's your wedge right there. Broke down, we broke this trend line, nice trade, okay? Now, the current pattern is a channel. That's what I have it as. So here's a channel, and then inside of this channel, we have this W, here's a triangle, okay? And here's a thrust out of a triangle for a B wave, and then this is a C wave here. So I have a WXY, and now we're putting in a larger X wave down here. So this is also trending. Let me move this out of the way so I can show you the trending pattern here. This is just trending beautifully like this, okay? And at this moment in time, this is doing a back test. We have a low here in RSI, and that typically tells me that the low is not in. Okay, we could break this trend line and do a modest overthrow, kind of like this. Okay, probably back up to this previous degree, swing high, and then break lower. If I were really getting into analyzing this on a shorter term chart, that's what I would do. I'm looking down here at the 1120 area because I have measurements down in that area. So thus far we have a W. Here's the X. I don't know why the X isn't there. I have it on the lower level chart. It's not showing up on this chart. So we have a WX. Here's the Y. I'm looking for the next X. Okay. Inside of a trending pattern, there are waves and sequences, right? Could it break that trend line? Yeah, it could. And then we could have a marginal new low, and it could go all the way down here as well. But, you know, RSI is not finished yet. RSI has broken. Okay, this is the other thing about trending patterns is trending patterns tend, like this channel here, look at that beautiful channel there, look at this beautiful trending pattern in RSI. RSI price cycle usually breaks before price breaks down. So the RSI price cycle broke right here while we're still inside the channel. That's a hint, okay? That's a hint we could have one more marginal new high or a double top, okay? Then it breaks down. So this is a typical RSI to channel pattern type setup. So you get the channel, right? You get the break in RSI, you could get a double top, but then the channel breaks and it goes, okay? So that's kind of what we're in right now. We're in a back test. Could we break through? We could. It's possible. If I look at a lower level chart, I'm sure I'll talk myself out of it. But, you know, for me right now, this is a Y, and I'm looking for the last leg down, and this is a C wave, okay? So we'll see how that plays out. I'm sorry, let me just make that clear. There's the Y. So, you know, anyway, so I'm trying to answer the question in terms of looking at trending patterns on RSI on a more detailed basis. Of course, these are on the lower level chart. We were looking for this area up here. We were looking for a back test up to the trend line as a back test. We got that already. Right there it is. However, you know, the lower low here is essential right now in this pattern. I'm looking for 1120s at this point. We haven't broken the trend line yet on the hourly chart. If we do, we could be putting in a high back up into here, and then the lower low would be the last low. We don't have any significant divergence here yet, okay? So that's kind of how I see the trending pattern on RSI. The larger cycle on RSI, this channel, you know, back testing a channel like I've indicated here, it's a very, very common pattern. So, you know, we may not be done with that back test. That's the only thing I wanted to say about that. So, okay, so throwing it back to you, Jack, in terms of anything else you want to say about RUT? And
I'll talk about RUT as well. Yeah.
Okay. And I have another question here. An inside day on ES, how does that have implications for your inside days? And typically, if they're NR7 days, Robin, they have implications for the potential for a trend tomorrow is higher. So that's kind of how I look at it. And you may have a take on that as well, Jack.
Yeah, I mean, it's just a consolidation day. I mean, the reality is it's the pattern structure which I would mainly be looking at on that. I mean, you often see an inside day like this, for instance. So, this is the 15-minute chart. But this is the sort of thing that you can often see. You see your strong move down, and then you get a consolidation day. That will often take the form of a flag. A flag, of course, is actually just a trending pattern on a smaller degree. So you're talking about, you can see them from the flagpole, which is the move down into it. So this would be the flagpole here, and you form a rising wedge which retraces, in this case, you know, just over 38.2% of the previous trend down of the flagpole, and then breaks down. This is a bear flag. It's a rising wedge when you're looking at it as a standalone pattern. In the larger context, it's a bear flag. Then you've got another flagpole down. This is a strongly trending move. And you've got another rising wedge which forms another bear flag and breaks down again. The normal way you would calculate the targets on here is we would normally you would, on a bear flag, you're either looking for a retest of the lows, in which case you're looking at a potential double bottom, or if it extends, what you usually take is the height of the flagpole, which in this case is 1205 to, is that 1160? Yeah, 1160. 5-ish, so we're talking about 40, and then you would take the move from the top of the bear flag. So that would take you down to 1142, and that gets you falls slightly short, starts forming another bear flag, then makes the 1142. I'm wondering about the rat chart at the moment, because at the moment it's broken declining resistance from the high. But there's a complication there. This is a head and shoulder pattern.
Yeah, it is. Yep.
On a head and shoulder pattern, you will normally take the trend line from the top of the right shoulder. I'm wondering whether we're still establishing that trend line.
We might be. We might be.
It makes a difference when you've got a. I mean, the thing is, on a double top, you take the trend line from the second high of the double top. On a head and shoulder pattern, you take it from the top of the right shoulder. And that is what I'm looking at here. It's possible that this little break up here means that we're going to retest this low and take off. In which case, well, we'll be watching it, but the this itself, on the smaller degree, when I'll be watching this tomorrow, will form another pattern with more trend lines. If it forms a, let's say, a falling wedge and that breaks up in this area here, then we will have a candidate double bottom. And I'll be watching then to see what happens on the retrace. Does it do a partial retrace and continue down and kill the double bottom, or does it retrace fully and test the double bottom support? Actually, I've got a very good example of this on the larger degree. Okay. Looking at the other way, because we're about to.
Can you go back to that shorter term chart, please?
Sure. Yep.
1133s would come in where on your chart, roughly speaking?
1133. Yeah.
Yep. Okay, because what I have next on the Russell is 1133, and I'm wondering if that's definitely going to break below your blue dotted line for sure.
Well, actually, if you take the classic flag pattern here, because this is a flag, I haven't actually done all the trend lines for it. But this is pretty sure this is
it's a bear flag for sure.
It's a rising megaphone. If you take the classical flag target, you've got 65 there, you've got 42 there, so you're talking about 22, 23. Take it from here, which is 1155, and what do you get?
31.
1132.
Yeah, yep. 31, 32. Yep, absolutely right. That's a match on my stuff, by the way. So I have 33s and then a big bounce, and then lower prices. So so it looks to me like the trend is going to continue on the Russell. Down at least to 33s.
What is concerning me on the Russell? Now, the Russell has been by far the weakest of the all of the equity indices that I watch. And actually, if you look at it on the larger scale, this is the weekly chart over multiple years. What we did was we broke an important support trend line here, and we are retesting it. We've got no further than retests here, and on this bigger picture, within this larger degree rising megaphone, we are forming what looks like a head and shoulder pattern. Now, I said when we started this move here that the ideal high would be at the left shoulder high at 1212. We've got pretty close. So we could get a little closer.
I agree.
But this is lining up really nicely for this to be a head and shoulder pattern. Obviously, it could break up, sure, but I don't think it's going to. I think chances are we'll find ourselves wherever we find the high on SPX, we're probably going to find ourselves, knocking around 1200 on run. And we will have spent, because you need to spend a proportional amount of time, it doesn't have to be the exact amount of time, you have to spend a reasonable amount of time building shoulder so it doesn't look too unbalanced. And we've been spending that time.
We're almost out of time. I just want to pay attention. It's almost an hour. If anybody has any other questions, now's the time to ask. And we have one other question, Jack, which is about trend days. Okay.
Go
on. Fred, you say, how do you determine a day is likely to be a trend day? Are you day trading or are you swing trading? Because there are two different ways to look at it. Okay. The most reliable way to predict the trend day is to look at what your AD line is doing. If you have a buried AD line in the 400 to 450 area, you're likely going to have a trend. Or you can look at up volume or down volume. Volume and by the way, you need to understand the clock for the trading day. So like by 9 a.m. to 9:20 a.m. Eastern Standard Time, okay, that's the right time. Program trading makes its decision as to what it wants to do for the day. That's program trading time, okay? So between that time, between 9 and 9:20, if your AD line goes up into that area, then don't try to counter trend anything, because it's just don't even do it. And by the way, your up volume and down volume, okay, look for 80 to 90% up volume or down volume. If you have 90% up volume or 90% down volume, just forget about it. That's a buried trend day, okay? It sometimes starts lower, but you know, by 9 o'clock, 9:20, the program trading guys have like made their decision for the day in terms of how things have opened and what has happened. And there's even a trading system that gets into predicting trends based on what happens on the 5-minute bars between 9 and 9:20. So, and that's all about program trading, okay? So that period of time during the day gives you huge clues. And so I'd be paying attention to that on a trend day, okay? Now, the other thing is, there are other ways of predicting trends, which are cycles, which is a completely different animal. So I'm not going to answer that question right now. So any other questions, guys? We're about out of time. Jack, anything else you want to cover?
No, I think it's just, I'll just point out one last thing on RUT. This is a candidate double top.
Yep.
We are about to test double top support here, and this is when I commented on my blog sometime last week that we were looking at potential major top setups on both NDX and RUT. What I was thinking was RUT has a setup here to take it back to this low. This low is a neckline on the head and shoulders. On a larger degree. Potentially, I'm not that keen to see a major break of this low before Christmas, because I think the chances of getting a really serious decline going in December is just so unusual that it's hard to take the position.
I'm telling you that we are going to see, and we've been saying this for some time, but the March-April area, guys, it's going to be a low. It's coming, and it may not start until January. We'll see, but I am not bullish this market. I am not. This is not the market to be bullish in terms of looking at a long-term bullish trend from here. It's just not going to happen. Might we see new highs? Yeah, we could see new highs, but you know, it's the next significant low is in March-April. So we'll see how it plays out. Anyway.
The reality is we've been topping out for over a year. I think that's the extremely likely thing that we have been looking at on SPX and the other indices.
Yep, absolutely.
And it takes a while. The reality is tops take a while, big tops take a long while.
Yeah, they do.
I think the 2007 top check, I think, took 18 months to form.
Yep.
The topping patterns.
Absolutely. There's a couple of questions in the room. Will I get a recording of this later? Absolutely, yes. It'll be up on the main page and the website. By the way, guys, be patient. Vimeo takes forever to convert something to HD, so just be patient. It'll be up tonight sometime. And guys, that's it. Unless there are any other questions, I think that's a wrap. And thank you for the questions, by the way. It makes it interesting for us. And Jack, great job as always. Thank you.
Yeah, pleasure as always, man.
Yep, same here. Take care. Bye-bye.
Yes, sir.